Hello, what's up guys? In today's video, I'm going to be walking you through step by step on how to invest in the Nigerian stock market. This is going to be the most complete, or will I say comprehensive video from a Nigerian for free that that will show you or teach you how to invest in the Nigerian stock market. I encourage you to smash the like button and subscribe to the channel, just to show support. It's totally free of charge. Subscribe to the YouTube channel and let's get to 1,000 subscribers as quick as possible. If there's anyone as well that you believe this video would be helpful to, please, I encourage you to share the video to them. I also have created a community where I intend to go live from time to time to share my own knowledge that I have when it comes to investing in the stock market. Note, I'm not an expert. I'm just a young man like you that is looking at growing his wealth. And if you want to grow your wealth with me together, join the Invest with Micah community and let's grow our money together. Let's get back. And without much talk, let's dive right into today's video. Let's go. So in this video, we are going to basically cover what are stocks. We'll go through understanding the stock prices. We'll also cover what is a stock market and go through why you should consider investing in the Nigerian stock market. We'll go through two major types of stocks, the risk involved in buying stocks, how to mitigate your risk exposure when it comes to investing in the stock market. We also go through the best apps to buy stocks in Nigeria, the sectors in the Nigerian stock market, understanding mutual funds and ETFs. Some people are actually interested in this. I'll explain it to you, and then I'll show you explain how to find winning stocks in Nigeria, and I'll also go through practical strategy for finding these winning stocks. Also try to go through reading the financial statements, how to understand reading the financial statements, and other words there are some unique words that you're going to find in the financial statements. I also try to explain them to you. We conclude and I make my recommendations when it comes to investing in the stock market. Let's proceed now. So here's Mike Irumaka. Mike Irumaka is a young Nigerian entrepreneur. I started my first business a few years ago, and it failed actually, but ever since then I've been involved in several things, and I'm trying to also grow my wealth just like you watching this video. And I believe that the best way to grow your wealth is not just to grow it alone. You should have like a community that would hold you accountable, and that's why I'm trying to build this YouTube channel and also build an investing community. So if you're anyone like me, you're trying to grow your wealth, subscribe to the channel and join my community. Let's continue. Why invest now? Why should you consider investing in the Nigerian stock market? Why? The first reason why you should consider investing in the Nigerian stock market is, one, Nigerian stock market is very, very undervalued. That's just the truth. If you cannot compare the Nigerian stock market to the South African stock market. The Nigerian stock market is very, very undervalued. Most companies are trading below their worth, and in the next few years, I believe that Nigeria will be in a very, very good position. I believe that everything is going to turn around, and the best time to invest is in a time when things are in chaos. That's the time you find things undervalued, and then on the long run, you get to reap the fruits of your labor. Especially if you're a young Nigerian like me, now is the best time to start buying assets, start investing. So that's one of the reasons why you should invest now. And then the second thing again is that the stock market offers one of the best return of your money. If you compare the stock market to the bond and others, you understand that the stock market gets to give you a higher ROI. It has high risk, but it also has high reward when compared to investing in the bond, in treasury bills and all that stuff. So these are two major reasons why you should consider investing in the stock market. Now, common fears. Many people are actually hesitant to invest, due to fears of market fluctuation. The Nigerian stock market fluctuates a lot. It fluctuates a lot. So many people are afraid, and because of these fluctuations, you can actually get to lose your money. So this is a major reason why people are scared. So while it is true that the stock market can be volatile, history has shown that over the long term and the long run, stocks have consistently outperformed other asset classes. Additionally, there are strategies that investors can employ to mitigate their risk exposure and protect their portfolios. I will actually show you and share with you how you can mitigate your risk exposure when investing in the Nigerian stock market. So don't be afraid. Don't be afraid. I got you covered. So when it comes to investing, the first thing is to start small. You don't need to invest a large amount of money to get started. You need to start small, especially if you're just starting out. You want to start small and then build your your you're investing, capital. You start small, and with time, once you've understood the stock market, you get to, put in more money into the stocks you already own. Then you diversify your portfolio. You don't want to put your eggs in one basket. Diversify your investment across different asset classes and sector to reduce your risk exposure. These are one of the strategies I'm going to talk about during the course of this video. Then invest for the long term. Many Nigerians, you have this quick money mentality. You want to get our money as soon as possible, fast, 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 which is not good. You want to buy stocks that you know you can hold for the next 3 months, 5 years, 10 years. It's up to you, but invest for the long term and not for you to invest 100 naira and looking for 500 naira, in the next few days. Nigerian stock market is not spot betting. This is not bet Nigeria. This is not sporty bet. This is stocks you're buying. You're investing in companies, so it's quite different. So invest for the long term. So what are stocks? Let's jump in. What are stocks? Stocks are also known as equities. They are units of ownership in a company. When you buy a stock, you become a shareholder. For example, let me say this is a company. This is the bottom of the company. This is the head. This is the side. Let me say I buy this part of this company. I'm now a shareholder of the whole of this. So that's what a stock is. So when you buy a stock, you become a shareholder in the company and you are entitled to a portion of its profit. So once this thing starts generating money, this is a Bluetooth speaker. I'm entitled, as someone that owns part of it, I'm entitled to some of the money that this company is, or this Bluetooth speaker is making. So this means that you have a claim to the company's assets as well. So once this thing has an asset, I have a claim to it. And you can also, influence voting decisions and, company decisions as a shareholder in the company. There was a time I bought a share in the United States, not Nigeria, Tesla. I was, still starting. I was just starting out, and I feel just little shares in Tesla. And then a few days later, I got a mail that they are going to be having, that I can vote for who will be the director or something like that. I click and wow, it was there. So as someone that owns part of a company, which is the stock, I'm entitled to voting to an extent. So this is something you need to understand when it comes to investing in the Nigerian stock market. So understanding stock prices. The price of a stock is determined by supply and demand. So when there is more demand for a stock, there is high possibility that this price is going to go up because many people want to buy it. Many people want to buy this. The price will go up for you to purchase it because the demand is much. And when there is more supply of the price will likely go down. Investor sentiment and company performance also plays a role in stock prices. When let me say the profit of this company in the last year was huge. Many will be like, this company is profitable. Let me go and buy the stock. Let me go and buy the stock. And then the price of the stock will start going up because this company is doing quite well. So this is what I mean by investor sentiment and company performance also plays a role in stock prices. So if investors are optimistic about a company, the future of the company, the price of its stock is going to go up. Conversely, if investors are pessimistic, if they feel that this company is going to die today, why will I want to go and buy? Why will I want to go and invest and start buying this stock? So this is a sentiment that plays a role in determining the price of a stock. Now, what is the stock market? What is a market? Let's first of all understand what is a market. You have explained what a stock is, but you need to understand what a market is. A market is a place where buying and selling takes place. So imagine a bustling marketplace where companies can introduce themselves and sell tiny pieces of ownership to interested individuals. So let's imagine that this is a company. It's in a place, in a market where buying and selling can take place. And in that market, this company is interested in selling parts, which is this part in the market. Then me as an investor, I come in and say, okay, I like the amount of the part of this company and I buy it. So that's what the stock market is. The stock market is a place where buying and selling of companies' stocks or shares takes place. And the one we have in Nigeria is the NYSC, NGX, Nigerian Stock Exchange. So that is where Nigerian stock companies in Nigeria, that is where they go to sell units of their companies. So why should you consider the Nigerian stock market? The Nigerian stock market offers a compelling opportunity for investors seeking growth and diversification. So, as a rapidly developing economy, yes, Nigeria holds immense potential for companies to expand and thrive. So, by investing in Nigerian stocks, you can tap into the growth potential and potentially reap significant rewards. One of the best performing stocks in Nigeria over the last few years has been Dangote Cement. You also have the likes of MTN. So these are stocks that would likely give you huge return of your money if you had invested, maybe a year ago or a few months ago, especially Dangote Cement. And one thing you need to understand why you should consider the Nigerian stock market, even with the situation of things, is that now the prices of stocks, even though the Nigerian stock market has been performing well, most of the stocks there are undervalued. So this is the best time to invest, like I've said earlier. So the two major types of stocks, we have common stocks and then we have preferred stocks. These are the two major types of stocks we have: common stocks and preferred stocks. I'm going to explain. Understanding common stocks. So common stocks represent the most basic form of equity ownership in a company. Like they call it common. That's why it's called common. It's the most basic, equity you own in a company. Shareholders of a common stocks hold the following rights. First of all, as a common stockholder in Nigeria, in a company in Nigeria, you have voting rights. Common stockholders have the right to vote on matters such as electing the board, who is going to be the board director. You have, as a common stockholder, you have the right to approve mergers and acquisitions. And when it comes to changing the corporate laws of that company, as a common stockholder, you are entitled, to helping to make decisions that will drive this kind of implementations in a company. The second right you have as a common stockholder is residual ownership. Common stockholders have the residual claim on a company's assets. Yes, you have a claim on the asset of a company, and also the earnings. And after all obligations such as debt payment and preferred stock, stock dividends are met. I will talk about preferred stock later. You now get entitled to your own share. You get entitled once debt payment. Once, let me say, in the end of the year, the company has paid its debt, they have settled their preferred stockholders, then you are entitled to residual ownership of a little bit of their profit. So when the company is in loss, you're following them to have that loss as well. And then you're entitled to dividend right, which is something I still talked about to an extent. You, as a common stockholder, when the company is paying dividends, you are entitled to getting a share of a dividend a company is paying to their shareholders. Then understanding preferred stocks. So like the name said, preferred. The other one was common, just ordinary. Then you have preferred, like your preferred. So preferred stock is a type of equity that combines the characteristics of both a common stock and then debt. I will explain. Preferred stockholders, they have priority. A company prioritizes you more over common stockholders when it comes to dividend payment and liquidation. When a company is liquidating, when they are selling, they will consider you first before a common stockholder. So this means that they are paid dividend first and they receive their investment back before common stockholders in the event of a company's losses. Now let's talk about the key difference between the both of them. The primary key difference between common stock and preferred stock lie in their dividend preference and then voting rights. When it comes to dividend preference, common stockholders do not have guaranteed dividends. As a common stockholder, you are not guaranteed any dividends. When a company is in loss, you're not guaranteed. When they're in profit, you're not guaranteed. They'll pay the preferred stockholder first before they start guaranteeing paying you stocks. So why preferred stockholders, like I said here in the presentation or in the slide, you have a fixed dividend. Your dividend is fixed. You're sure that no matter how you pay, they will pay you your dividend as a preferred stockholder. Then talk about voting rights. Common stockholders have voting rights, while preferred stockholders typically sometimes do not have voting rights. So these are two major differences. So when it comes to investing, the choice between common stocks and preferred stocks depend on your risk, your exposure to risk, your risk tolerance, and then your investment objective. What are your investment goals? Common stocks offers the potential for higher returns, but also carries greater risk. Yes, there are high chances for greater reward as a common stockholder, but it carries greater risk. While preferred stocks offers a more stable income, you're sure that no matter how it be, this little amount of dividend they will pay them to you. So it offers a more stable income stream but may provide limited growth potential and may not offer voting rights. And that's why in Nigeria, most investors go for common stocks. Any app you're using to invest in Nigeria, most of the stocks you're buying are common stocks. But if you want to invest in preferred stocks, then you have to now set up a proper stock brokerage, account. You have to set up a proper account for you to reach out to your stockbroker and tell them that you want to purchase a preferred stock of a particular company in Nigeria. Now, risk involved in buying stocks in Nigeria, what are the risks? Wetin be all those things wey fit make you lose your money when it comes to investing in the Nigerian stock market? The first risk involved in buying stocks in Nigeria is the number one risk is volatility, market volatility. The Nigerian stock market, and the thing can go up like this, it can go up and it can come down, it can be doing like this every day. So the market volatility is too much. So the Nigerian stock market is relatively young. That's why it's volatile and can experience significant fluctuations in prices. Today you can come and say Dangote price, the price of their shares is 240 naira. Tomorrow, all of a sudden, yeah, got to 100, it will go to 100 naira. I just spoke Igbo. Yeah, got to 100 naira, it will go to 100 naira. So this volatility can lead to losses. You bought stock at 240, then the next day is at 100 naira. You just lost huge money, especially if you invested huge into that stocks. So this is something that can happen to you as a stock market investor. Then you have company specific risk. The performance of individual stocks can vary considerably, and some companies may fail to experience financial some companies may fail or may experience financial difficulties, leading to losses for investors. What this means is that when it comes to investing in the stock market, you can have company specific risk. Let me say you bought Dangote cement today, and then the company came out in the end of the year and said that they lost money. There are high chances that your stock price will dip to fall. BUA cement, which is a competitor to Dangote, might be in profit, and people that invested there, their stock prices will go up because the company is in profit, they are healthy. So people will rush there and start buying their stocks. So this is company specific risk and not industry specific risk. The industry is doing well, one of the competitors is doing well, while the other one is not doing well. So these are some of the risks involved when buying stocks in a company. Then you have economic and political risk. This one, you're supposed to understand it. Nigeria is a very political instable. Is a country that sometimes can be politically instable. I don't know how to pronounce it, but the political instability in Nigeria is high, and it can affect the stock market. And then the economic situation in the country as well can affect the stock market. When a country is not really doing well, the stock market definitely won't be doing well as well. So these are some of the risks involved. And then there are other risks like currency risk and liquidity risk. Currency risk, has to do with you're buying stocks of Dangote. You buy one stock for 240 naira. You might end up making profit, but the US dollar is the most is a global currency. If the naira is not doing well against the US dollar, when you bring out your profit, let me say you invested 500 naira, and then your money doubled to 1,000 naira, and then 1,000 naira now when you invested 500 naira in the stock market, it was 500 naira was $1. You invested 500 naira. Then when you now in the next few months you made 1,000 naira, and then in that next few months naira to dollar is now at 1,000 naira to $1. It means that yes, you made profit in naira, but in dollar your money is still there. You did not make any much profit. So this is one of the risks involved in investing in the stock market. And then you have liquidity risk. Liquidity risk, it has to do with are people buying stock, like are people buying that particular company's stock? So whenever you want to sell your shares, you'll be able to sell it as fast as possible. So this is very, very important when investing. If you go invest in a company that does not have high liquidity, there are high chances that when you want to sell your stocks, before you go find person you go buy them, it go hard. It will be very difficult for you because there is low liquidity, the volume is low. So this is another risk involved in investing in the stock market. So how do you mitigate your risk exposure? How do you try not to lose money? The first way to not lose money is to diversify your portfolio. You have to invest in a variety of stocks. Now, I'm not saying you should go and invest and go and buy different company stocks. I'm not touch this. I'm not saying you should go and invest and buy the stocks of many companies. No, I'm saying that you should have at least maybe 3 to 5. Personally, as I'm starting out, because I'm starting at fresh investing, I want to buy 3 stocks of 3 companies. So you don't want to invest in 10 because to track it will be difficult, but at least you buy like 5 different companies in few sectors, and then you have diversified your portfolio. Even when one is not doing well, the other one will likely be doing well. So that's why you want to diversify. Then you need to have a long-term perspective. You don't want to be the kind of person that is you buy stock today and then the stock will go down to 15 naira. You'll not be scared. And so I'm losing money. You're going to start selling it the next day. No, you need to have a long-term perspective. You need to invest in companies that you want to do or die. No matter how it be, you go hold their shares. You're going to hold that stock. So this is the kind of way to mitigate your risk exposure, because it might be 15 naira. You might invest at 100 naira today. Tomorrow is at 50 naira, and then next week is at 500 naira. So if you had sold when it was at 50 naira, you don't lose money, you have lost money. So this is something you need to consider. You need to have a long-term perspective so you can mitigate your risk exposure. Then you need to do thorough research. This is very, very important. You need to conduct thorough research on companies before you start investing. You need to evaluate their financial health, their management, and then future prospects, what lies ahead for that company. This is something you need to consider. And then continuous monitoring. You need to stay informed about market developments, economic indicators, and companies updates. What is happening in the company? So before you make whether you should sell, if the company is not innovating, only sell that shares. What is you doing in your portfolio? You want to sell. So these are some ways to mitigate your risk exposure. Now let's talk about the best stockbrokers and apps for buying stocks in Nigeria. Now, there are many apps to invest in the stock market now in Nigeria, but as you can see on the screen, I have Rise, Vest, you have Bamboo, you have Taka, you have Trove. These different apps can be used to invest in a variety of stocks. For me, when it comes to buying stocks in Nigeria, I love Trove. Trove is my go-to app. It might change in the future. If you join my community, if it changes in the future, if my preference changes in the future, I'll still let you know. But for me, for now, I love to use Trove to invest in the Nigerian stock market. And then when it comes to investing in the US stock market, I consider Bamboo. And when it comes to investing in other markets, I love Chaka. I heard that Chaka was sold recently. I've not really opened the application, but I'll put link in the description in case you want to sign up. You can use my link to sign up so I can at least earn some little commission when you start buying stocks. It's not like I'm not earning from your money. No, it's Chaka that is paying me. It doesn't concern you. You understand? But I encourage you to actually use my link in the description, use my code, and sign up, and also join us, and let's get this money. Let's get this back together. So when it now comes to stock brokers are quite different from stock apps. Stock apps is a fast way to invest, is a quick way to invest. You set up sharp. Then stock brokers now is quite different. This one has a little bit of manual process. You need to reach out to them and have them set up an account for you and all that. But when it comes to using stock brokers, some of the best in Nigeria is Cardinal Stones. You have Afri Invest, you have Stanbic IBTC Stock Broker Limited, you have FBN Quest, you have Mary Stem, you have CSL Stock Brokers, you have Chapel Hill. Personally, I would say either you use Cardinal Stones or Afri Invest. Other ones on this list are good, but I encourage you to use any of the two. If you're confused about setting up a stockbroker account, I would be making a video in the future on how to set up a stockbroker account. Just subscribe to the channel, and definitely when that video drops, turn on the notification so when the video drops you will be notified and you watch the video and understand how to open a stockbroker account. And then for stock apps, I'll be making a video on videos of this on this application. So I encourage you to also subscribe and turn on your notification bell so you get notified once I drop the video on this. Sectors in the Nigerian stock market: you have the health, technology, you have industrial, you have miscellaneous, you have non-energy minerals. There are lots of them. If you go to the Nigerian Stock Exchange, the NGX website, you see there are 11. But generally, if you do a more in-depth breakdown, you understand that all these companies fall into 19 categories, and these are the 19 sectors that they fall into. You can decide to invest in any industry or sector that you find or you have more knowledge about. Now, when it comes to investing, you have key sectors in the Nigerian stock market. These are sectors that are the pillar of the Nigerian stock market. You have the banking sector. The Nigerian banking sector is a cornerstone of the economy. The banking sector plays a huge stone in the Nigerian economy, and that is why it's also very, very important. It's a key pillar in the Nigerian stock market. You also have the consumer goods, which is the FMCG. Nigerians are consumers. You like to eat. So the consumer goods sector also caters to the need of the stock market. Like, I don't know how to put it, it's a pillar of the Nigerian stock market as well. And the prominent companies in this sector include Nestle, Nestle Nigeria, you have Dangote Flour Mills, and you have Guinness Nigeria. These are key companies that are the pillars when it comes to this sector in the Nigerian stock market. And then you have oil and gas. These oil and gas is it's vital for the Nigerian economy. So that's why you have it's one of the key pillars of the Nigerian stock market as well. So other key sectors in the Nigerian stock market, you have telecommunication companies like MTN Nigeria, Airtel, Globalcom. These are companies that are pillars in this sector. Then you have construction. Nigeria is still a developing country, and one of the pivotal things that helps in development is building of infrastructure, construction, and that's why construction is a pillar in the Nigerian stock market. With Dangote Cement, Lafarge Nigeria, Julius Berger, VUA Cement, these are companies that fall into this particular category. So why you should diversify your investments? Why you should diversify your investments in sectors? So one of the importance of sector diversification is, it is an essential strategy for mitigating your risk when you diversify your investments in different sectors. So when one sector is not doing well, you know that maybe the other sector will do well and might cover up for your losses in the other sector. So that's a very, very good reason why you should want to diversify your investment in different sectors. And it's very, very important that when you also diversify your investment in different sectors, it's very important that you are knowledgeable about the sectors you are investing in. You don't want to invest in sectors that you do not really understand, because you might end up making a wrong financial decision. Understanding mutual funds and ETFs. What are mutual funds? Let's start with mutual funds. What are mutual funds and what are ETFs? Mutual funds and ETFs are popular investment vehicles that offers investors a diversified portfolio of securities. We talk about diversification. So this is what mutual funds and ETFs offer to you. So while they share some similarities, there are also key differences in between the two of them, and I will explain. Starting with mutual funds. A mutual fund is a professionally managed investment fund that pulls money from multiple investors to buy a basket of securities, such as stocks, bond, or a combination of the both of them. Now you now have a fund manager. You now have someone that is managing this basket of stocks and bond that different investors invested in, and then this particular fund manager is paid a little fee for him to manage your funds for you guys. Yes, you guys get to pay him, and the fund manager actively selects and manages the portfolio, and he aims to achieve specific investment objectives. And one of the objective is capital appreciation or income generation. So either he wants to help you to grow your money, or he's trying to help you to make some money. In a sense, your capital might be with him, but your capital is growing, or maybe he's sending you a specific amount of money, that kind of thing. So these are some of the objectives of a mutual fund, or some of the objective a mutual fund manager gets to set when they are managing your fund for you. Talking about ETFs is for people like us that don't really have money to pay someone to manage our portfolio for us. So it is a type of investment fund that helps you to track the performance of specific indexes. So when you talk about specific indexes in the United States, you have the S&P 500. The S&P 500 is an index that tracks the stocks of 500 companies in the United States, like good companies in the United States. While in Nigeria, you have the Nigerian Stock Exchange All Share Index, which is the NXEASI. It tracks the stocks of some popular companies, I think over 30 companies in Nigeria. So this is something you can this is an index fund, an ETF you can invest in Nigeria. And their prices fluctuate. When it comes to index fund, their prices fluctuate throughout the day. It can be up and down, and it's quickly, you can easily track it when compared to a mutual fund. Now, mutual funds versus ETFs, which is best for you? The choice between the both of them, I don't know how to put it, depends on your circumstances or your risk tolerance, and then your investment goals. Most mutual funds offer active management and may be suitable for people who prefer a hands-off. You don't want to be the one to manage it. You want to give it to somebody to manage for you. If you prefer a hands-off, active management of your stocks, then the mutual fund is for you. But just know that you're going to pay some money to the person that's managing it, because he's not putting in his time managing the fund for you. While ETFs is much more lower. Is a lower cost, and it offers a passive tracking. Now you get to track it, but it's passively. You're not tracking it that much, but and it is more appealing to investors who prefer a more cost-effective and transparent approach. So before investing in either mutual funds or ETFs, it is very, very crucial that you conduct thorough research. You try to understand the underlying investments and the assets that are in that basket or fund, or in that in that basket, either that is in that mutual fund or in that ETF, before you go ahead to buy it. You don't want to go and buy an ETF that would end up losing you money, or you don't want to invest in a mutual fund that will end up losing you money. And personally, for me, if you're watching this video, you don't have much money, I will advise you that you invest in ETFs, and later on you can actually then go ahead to invest in a mutual fund. The Nigerian ETFs have been performing good. They have not really performed bad lately, so you might want to consider investing in ETFs in Nigeria. So how to find winning stocks? This is the cocoa. How do you find stocks that will make you money? Let's jump in. There are 3 ways to find winning stocks. 3 ways, and you can see it on your screen. The first way is doing fundamental analysis. The second way to find winning stocks is doing technical analysis. And then the third way to find a stock that will make you money is behavioral analysis. Don't worry, don't be scared. I got you covered. I will explain. Now, fundamental analysis. Fundamental analysis is a method of evaluating a stock's true value, intrinsic value, true value of a stock, and it's done by examining various financial and economic factors related to the particular company you want to buy their stocks. So it involves analyzing a company's financial statements, the people that are managing the company, the management team, and then the condition of that industry where that company falls into, that sector they fall into. You analyze it, and then economic indicators to determine the true value of that stock you want to buy. Most times you might end up buying a stock that is overvalued, that the value is too much, and you end up losing money. It's at an all-time high, and then later the stock price will fall and you lose money, so you invested at the wrong time. And so a fundamental analysis helps you to find the true value of that stock, so you know whether you're buying the stock at a good price or at an overvalued price. Then the key components of fundamental analysis are earnings. So earnings assesses the company's profitability and earning growth over time. How is the company's money growing? And then it also assesses the revenue of the company, the total sales, and the different revenue streams. How is the company, different sources of income or revenue for the company. It also assesses the debt level of that company. How much is the company owing? How much do they owe people? Is it too much? Are they in debt? Will they go bankrupt? That kind of thing. So you evaluate the debt to equity ratio to know the financial condition of the company, financial health of the company. Then you also assesses the management team. Who is managing this company? Is it somebody that used to play bet Niger, someone that used to play sporty bet, that will end up using the company's revenue or income to go and play sporty bet, short 200 odd. So fundamental analysis helps you to assess this kind of thing, to know who is running this company. Is this someone that has a track record? And then industry trend. What's happening in that sector that company is in? Is the industry growing? What is the projected growth rate of the industry that you're buying the stocks of a company in that industry? And then you talk about technical analysis. This is for people that will have an idea about this is forex trader, but I'm not a technical analysis person, but I'll try my best to explain to you. So technical analysis focuses on studying the historical stock price movements, and then technical indicators, your charts. You try to identify trends, patterns, the potential support or resistance. You see them, all these stock forex traders, support is at resistance, that kind of thing. So this is what you do. And most people that do technical analysis before investing in the stock market are mostly day traders. So if you want to be a day trader, then this is necessary for you. But it's also important to know that you can also not be a day trader and still use technical analysis. I'm not saying this is specifically for day traders. No, you can do technical analysis as someone that still invests long term. So the goal of technical analysis is to predict future price movements based on past stock, price behavior. Now, the key components of technical analysis is price charts. I talked about charts. You have the price chart is like a graphical representation of a stock's historical price movement. When last the stock was at an all-time low and at an all-time high. And then you have technical indicators like the moving average. This is the RSI, the relatively strength index. This is forex traders, one of the terms forex traders uses. And then you have the trend lines, which you use to identify patterns and trend. And then you have volume analysis. You use volume analysis to examine the volume, the trading volume of that company, to gauge the price movements, to know if people are buying and selling these stocks. So this is some of the key components of technical analysis. Now, behavioral analysis. Behavioral analysis in investing involves, this is something that has to do with psychology. It involves psychological factors, emotions. People buy based on emotions sometimes. It involves cognitive biases and which influence investment decisions and market trends. It recognizes that investors are not always rational and that market movements are often driven by human behavior, leading to opportunities and risk. People sometimes they invest out of emotion. So you use behavioral analysis to know how people reacting. Is there a news that is going to come out tomorrow that will make people want to rush and go and buy that stock? This is what behavioral analysis has to do with. You try to understand people's emotions before you buy stocks. The key components of behavioral analysis is emotional influence, like I have mentioned, fear and greed. There is this quote by Warren Buffett: "Be fearful when people are greedy, and be greedy when people are fearful." This is very, very important. Very, very important. So, behavioral analysis has to do with fear and greed. You have cognitive biases, cognitive biases, which has to do with overconfidence. Investors might be overconfident of a particular stock, and they end up losing money. You also have herd mentality. People love to follow the herd. When people are buying Dangote, they rush and go and start buying it. You understand? You have to have moved before they start buying. When people are rushing to buy, maybe that's when you're selling. You understand? Be fearful when people are greedy, and be greedy when people are fearful. Now, practical strategies for finding winning stocks. How can you find stocks that will make you money? How will you make money? How? So the first one is to start with industries that you are familiar with, or industries that you use their products very, very often. You don't want to go into industries that you don't understand. If you're someone that is into construction, you buy a lot of cement, you know the particular company that their cement has a good quality. You understand? BUA cement is a competitor to Dangote. Maybe BUA cement, they are doing better than Dangote. But let me say, for example, let me just put it into proper context. Let me say BUA cement is the price of their stock is at 1,000 naira, and the price of Dangote cement is at 500 naira. And you usually use Dangote cement over BUA when it comes to your construction, and you understand that Dangote cement has more quality over BUA cement, and you know that on the long run, Dangote cement is likely going to do better. They're going to beat BUA cement on the long run. And you go to the stock market, you're an investor, you go to the stock market and say, oh wow, Dangote is trading below BUA cement. Maybe I should go and buy it now because I know that these guys will beat BUA cement. You understand the industry. So you go into the stock market and you go and buy a lot of Dangote cement. And then in the next 2 years, Dangote is now dropping financial statements and their profit is bigger than BUA cement. You see people start rushing to go and buy Dangote cement, and by then you see that the price of Dangote cement might go from 500 naira per share or per stock to like 1.5. And then if you bought huge, you have tripled your money has tripled. You understand? So this is the kind of thing that happens in the stock market. So you want to start with industries that you are familiar with, and then you have the top down and bottom up approach. So I'm going to explain this approach. The top down approach has to do with starting from the top. So you start with, let me use construction for example again. You start from the top. You start from, okay, construction industry. What's happening in this construction industry? How is the industry performing? Is this industry does it have a huge growth potential? You just do an overview, do a research on the industry. After you have done a research on the industry, you now try to find like 3 companies, 4 or 5 safe. 5 companies is ideal that are doing well in the industry. After you have done research on the industry and say maybe this industry is worth buying into, you now do research. You now go from top, you now go to the bottom, which is to list out 5 companies in that industry. And once you have listed out 5 companies in that industry, you now go deeper again to start doing specific company research. So this is top down. You start doing company specific research. From that 5, you now bring it down to maybe 2 companies. From 2, maybe you now bring it down to 1. You now do more in-depth research into the company. You read their financial statements, try to understand various things about the company, and then you now make your investment decision. So this is starting from the top: industry, company, short list, and then you pick one and then you invest. This is top down. Then bottom up is you find a company that you like. You do research about the company. You list out companies that you like, or particular one you like. Let me say BUA. You like BUA Cement. You bring out BUA Cement. You do more in-depth research into BUA Cement, and maybe you like BUA Cement. You feel there's good potential, but it's okay. Let me now take it macro. Let me go bigger. You now bring it. So how are their competitors performing as well? So you're starting from the bottom, you now go into their competitors. You do research about their competitors. From competitors, you now do an overview of the industry, what's happening in the whole industry as a whole, in the construction industry. And then BUA Cement might be doing well as a company. Their competitors might not be doing well. Then you now go to the broad industry and see that maybe the industry as a whole is not doing well, and BUA is doing well because the company is the biggest. But but after doing your research, you feel that you understand that this industry does not have growth potential, and that is why their competitors are not doing well. And there are high chances that BUA in the next few years might not do well as well. So you go macro and see that maybe this is not a good decision. You don't want to buy BUA Cement, so you just leave BUA Cement and go to another company that you like or you use and start doing bottom top approach. I hope that's understandable. Then the next one is choose companies to research, which is something I also talked about from top down and bottom up strategy. Find companies that you use, that you understand, and then you start researching them. You search them. You try to understand how is the company performing. What has been the financial track record of the company? What has been the all-time high of the company stock and the all-time low? Do company-specific research. And then the fourth strategy, practical step, is finding companies' financial statements and things to look out for. So when it comes to finding companies' financial statements, one of the ways you can find companies' financial statements is just go to your Google and search. Let me use Dangote Cement or let me use MTN Nigeria for example. I've used Dangote too much. Let's use MTN Nigeria for example. Let me say you want to research Dangote Cement now, and then you want to find their financial statement to make an informed decision. So one way you can find their financial statement is just go to Google and search MTN Nigeria. And that is, you just search MTN Nigeria investor relation or financial statement. You're definitely going to see it. And then once you find the PDF, you just go through it. And some of the terms or things you are going to look out for in the financial statement is going to be the balance sheet, the income statement, and then the cash flow statement. These are 3 important things in the financial statement that you're going to need to take a good look at, and try to understand the financial health of the company. So understanding the financial statement, I'm going to help you understand it. So like I've said, the financial statement is grouped into 3 main parts, and I've talked about them before, which is the income statement, the cash flow statement, and then the balance sheet. These are 3 important aspects of a financial statement, and I'm going to still go in depth into them. Starting with the income statement. So the income statement has to do with the profit and loss of a company. You try to understand, is a company making money? Are they losing money? And some of the things you're going to find in the income statement is the revenue. So the revenue is the total amount of money generated by a company from its primary operation. Let me say I run a business now. All the money I made from that business is not profit to all the money that I brought in, that the business generated for me. Let me just use this for example. Let me say I sell this. I have 10 of this, and I sell 10 of them in a year, and I sell them at the rate of 1,000 naira. 10 times 1,000 is 10,000 naira. So it means in that year, my revenue is 10,000 naira. So that is what the revenue means. So cost of goods sold. The cost of goods sold has to do with the direct cost associated with producing the goods or services that is sold. So back to this again. Let me say that for me to produce one of these, I'm spending 500 naira. So 500 naira is my cost of goods. Then gross profit. So gross profit has to do with your revenue. That's 10,000 naira I made minus the cost of goods. So 10,000 naira, I'm making one for 500 naira. 500 naira times the 10 I sold, which is 5,000 naira. So 10,000 naira minus 5,000 naira, that is my gross profit. And then operating expenses. So operating expenses has to do with the day-to-day activity, the cost of that is associated with running this business for every day. How much am I spending to run this, to produce one every day? Like no, it's not like to produce, like how much am I spending in fuel, in labor, all those kind of things every day, in rent, just to to run my Bluetooth speaker producing business, that kind of thing. And then you have your net income. So the net income has to do with the company's total earnings minus all the expenses, all the whole expenses that I use to run my business for the year, even plus the cost of goods, even taxes, everything. You minus it from your your gross profit, and then from your revenue, from your revenue, and you get your net income. But usually net income is you get net income from minusing from your gross profit, and then you get your net income. And then you're going over to balance sheet. So the balance sheet, it's a very very important aspect of a company. You get to use the balance sheet to understand the asset and liabilities of a company. And you're already seeing here that the first thing, or the first thing to understand, is the asset. The asset has to do with resources that are owned by the company that have economic value. And an example is money. Cash is an asset. Inventory, which is the product I'm selling, is an asset. It's an asset. And then property. Do I have the property that I'm using to produce this? Is it my own? Is an asset. Yes. And then you have liabilities. Liabilities are financial obligations. It could be debts that are owed by a company. It could be loans, account payable, and accrued expenses. The loans has to do with, am I borrowing money to produce this? The account payable is that somebody that I need to pay money into his account? These are liabilities. Liability has to do with something that is taking away something from my body just to produce this. You understand? And then accrued expenses. This is expenses that have choked up, that have come in, that have, I don't know how to put it, that have summed up over time. It's accrued expenses. And then you have equity. So equity is the residual interest in the assets of the company after deducting liabilities. Yes. It represents ownership interest in the company. What do people like? The shares. Yes, it's the shares people own in the company. That's what equity has to do with. And then current assets. So current assets are assets that are expected to be converted into cash within 1 year, or sometimes that's going to be used up within 1 year. What will I use for example now? Okay, let me use this clothes. This clothes is an asset because I can still sell it and make money. You understand? And as long as I sell this clothes within 1 year, I'm bringing money for the business. It's an asset for me. You understand? So that's what asset is. And I have current liabilities. Current liabilities are liabilities that are due within 1 year. It could be loan. A loan I have to pay within 1 year time frame. So that's what liabilities means. So understanding the cash flow statement. The cash flow statement is the money that comes in and goes out of a business. Cash flow, money that comes in and goes out, money that comes in and goes out. That's what cash flow statement means. And then you have the operating cash flow. The operating cash flow is the cash that is generated or used by a company for normal business operation. So it reflects the company's ability to generate cash from its core activities, from the major source, the major thing that the company does, the ability of the company to make money, to bring in money, and send off money from the core thing that the company is known for. And they have investing cash flow. So the investing cash flow is the cash flow that is resulting from investment activities, where the company invests money that is going to still bring in money for them. You understand? So that's what investing cash flow is. And you have the financing cash flow. The financing cash flow is cash flow that is resulting from financial or financing activities, and it could be from the purchasing of stocks. It could be from issuing stocks to people. It could also be from borrowing money. It could also be from repaying debt. So these are examples of financing cash flow used to finance the business. And then some other financial issues to consider when doing your research. This is also things that are very important. Some other things you need to consider when reading the financial statements, and some terms you need to have an idea about. It's going to be difficult for you to understand it now, but take your time. With time, as you keep on investing, you will understand most of these things I'm going to be talking about. The first is the EPS. EPS stands for earnings per share. Earnings per share. EPS. Earnings per share. So it is a measure of a company's profitability, and it is calculated by dividing the company's net income, which is the profit, by the number of outstanding shares of its common stock. So the number of outstanding shares has to do with dividing the profits of a company from the number of shares, the number of common stocks, which we talked about earlier, the company has issued to people. So you divide the profit by the number of common stocks the company has issued to investors, and then you now know how much earnings one share is bringing in, how much profit is one share in the company bringing in. So that's what earnings per share, and it's very, very important. If the EPS is low, it means that this company might not be bringing, each share in the company is not really bringing them much money. And if EPS is high, it means that the company is going good health. But it's also important to know that you need to, the other financial keywords or terms or things you need to read for you to know whether it's worth investing in the company. So this EPS does not just work in isolation. Moving over to price to earnings ratio. So the price to earnings ratio is a valuation measure that compares the company's current stock price to its earnings per share. The current price of the company's stock, you're comparing it to the EPS, the earnings per share that's the company of the company. So a high price to earning ratio can indicate that a company is overvalued. Yes, a high one indicates that the company is overvalued, while a low price to earning ratio indicates that a company is undervalued. So, however, it is also very, very important that you note that the price to earning ratio is just one factor, like I said about the EPS, that investors should consider, that you should consider when evaluating a company's valuation. Yes, it's very important to take note of this. You don't just use the price to earning ratio to make your financial decisions. You need to also go through some other things to know whether this company is worth buying. So for you to calculate the price to earning ratio, you simply divide the current stock price, which is, let me say the Dangote cement is selling for 500 naira, and then the EPS of the company is, let me say, 50 naira, $50, let me say 50 naira per share. So you basically you divide the current stock price 500 naira divided by 50 naira to now know if the company is overvalued or if the company is undervalued. So let me say you divide 500 naira from 50 naira. What you're going to get is 50 naira is going to be 10 naira. So 10 naira is good, is ideal. You want your EPS to, your price to earning ratio to be between 10 to 15 or even 20, but something that's higher than, usually something higher than 15 is high, like is overvalued. But it's also important to note again that when it comes to price to earning ratio, that it depends on the industry. Yes, tech industry usually have a higher price to earning ratio. So you need to understand the ideal price to earning ratio of the industry that you are buying their stocks. Then ROA, return on assets. So return on assets stands for, what is your asset returning for you. So it is a profitability measure that is calculated by dividing the company's net income by its average total assets. Yes, the total assets the company has, you divide the net income by the average total assets that the company has. And then the ROA is a measure of how efficiently a company is using the assets that it owns to bring in, generate profit. And a higher ROA can indicate that a company is well managed, that they are using their assets properly, while a low ROA can indicate that the company is not using its assets effectively. So this is very, very important. How effective is the company using their assets to generate profit? Then you have return on equity. ROE. ROE stands for return on equity. It is a profitability measure that is calculated by dividing a company's net income by its average shareholder equity. The profit divided by the number of average equity a shareholder owns in a company. So the ROE is a measure of how efficiently a company is using its shareholders' investment to generate profits. Do you understand? How is a company utilizing the investment of shareholders to make money for the company? And a high ROE can indicate that a company is making good use of its shareholders' money, while a low ROE can indicate that a company is not generating good returns on the investment shareholders made in the company. So this is very important. Now, concluding, this has been a very long video, very, very long video, and I understand that most of these things might be confusing to you, very confusing to you, but I'll encourage you to take your time. Personally, for me, I'm also on an investment journey and I'm learning, and I intend to share my knowledge as I learn, and I'll encourage you to take it a step at a time. With time, you get used to most of these terms, and if you're a young individual, I'll encourage you to make the most of your young age to start investing early, so that on the long run you get to enjoy the fruit of your labor. If you're an old man or old woman as well, time is not late. The best time to start is now. So you might not be the one to reap the rewards, but your children will reap the rewards of the steps you are taking today. I would encourage you to take your time, breathe in, breathe out, and don't worry, everything is going to fall into place. You get to understand these things or these terms more. If you have any questions, you can join my community on my Telegram, my Invest with Micah community, and drop your questions there. Or just join the community. I think the community is going to be closed for now, but later on I'm going to open it up so you can get to ask questions and everything. But the community is going to be a place where you can get to reach out to me directly and also learn from me. And it's not just going to be dedicated for stock alone, because I also want to be able to invest in other industries like the crypto market and all that. So if you're looking at embarking on this investment journey with me and grow your wealth with me, just join the community, and like I said, take it a step at a time. Subscribe to the YouTube channel and like this video so this video can be recommended to more people. Then share it as well. Don't forget to share the video. Because share the video is very, very important, so that the video can be seen by more people, more Nigerians, more Africans will get financially educated. And with that being said, see you on the next one. Deal.